but the market is not. The Dow wrestles up a half a point. Everything's up about a half a point right now. And I knew that was going to happen today. So I'm like, why should I put a big damper on it? And our beloved Tay Tay is getting married, so we should be celebrating. So I told Bodie, I said, hey, let's write a positive article about Taylor Swift getting married and tie it into the economy and talk about her economy. So I say, that's what I told him. I said, let's talk about Taylor Swift as an economic force, and let's talk about the rest of the economy. And I said, let's sort of talk about the top 10 things in the economy and look at them from the bright side, basically. So that's how he did this. And Bodie is generally an upbeat guy, so he looks at things this way. Anyway, so we wrote that. I thought it was pretty good. I thought it was a very good article, frankly. I mean, you know, considering he's not even a person, it's a very good article. And then we have our usual commentary. So commentary number 1 is by Zephyr. Zephyr, I'm about to reboot Zephyr, so I don't know what he's going to do in the future. But right now, what Zephyr tends to do is he packs in so much information. Like, he really, really packs in a ton of information in his morning report. Warren, on the other hand, just sort of like sums things up. You know, so he writes something that you can easily digest. Zephyr's, you got to really, when you're reading Zephyr's thing, you got to like have your graduate cap on, because he's demanding. But Warren's just like, hey, this is what's going on. Have a good day. Then I chime in with my little stuff. Here's the news I was reading in the morning. Then this. So then I looked at the watch list. And I picked stocks from our watch list because I'm saying, when I'm, again, why take a break? I took a break to have Bodie write a more positive article, to just say, let's look at the bright side of the economy. It's an argument for me. I mean, you gotta look at all sides. You can't ever look at one side. So I'm always looking and saying, well, what's good about this? And that's what we did in the morning. We said, what's good about these things? What's good about Trump's tariffs? What's good about the trade war? What's good about, you know, whatever the hell we were talking about. So what did he talk about? Maybe I should have gone into better detail on that. So what we talked about was, oh yeah, Trump versus Cook, Trump versus Powell, tariffs, corporate earnings, right? Look at the corporate earnings. Here's the average since 2007, the gray, right? Here was Q1 25, and here's Q2 25. So how many things were down last quarter? 17% down, 14% down this quarter. Last quarter, 54% unchanged, 28% unchanged. Well, that means that there must be a huge difference in up. And up is 58%. Guidances went up versus 29% last quarter versus 46% historically. So, you know, earnings are good. Now, you want to take apart why they're good? Because the dollar's weaker. And if the dollar's weaker, then earnings are going to be better because they're, you know, 50% or almost 60% of the S&P 500's revenues comes from overseas. Therefore, if the dollar is weak, we get more dollars. The conversion causes us to get more dollars, right? If the dollar is 100 to the euro, right? So I'm sorry. If it's a dollar per euro, let's put it that way. If it's $1 per euro, and a car costs 100 euros, then we get $100 for the car that we sell in Europe, right? But if the dollar is 90 to the euro, then not 90, I'm sorry, 110. If the dollar is weaker, it would be 110. So if the dollar is 10% weaker than the euro, which it is right now, then if you get 100 euros for the same amount of money for the car, no change, You get the same 100 euros in Europe for selling the car, but when the money comes back to America, it's 110. That's how earnings inflate. Dollar deflates, earnings inflate. Not only that, but you're paying your workers in crappy American dollars while you're collecting international money. So you're also getting a break on the wages. You're paying your workers less just because you didn't adjust them for the currency. They get screwed on the buying power. Meanwhile, though, consumer resilience. Now, I have a kind of an issue with this, because if I really want to make a fine point of it, 10 million Americans spent $1,300 to see Taylor Swift. First of all, I bet you 3 million of them saw her more than once. So it's not really 10 million different people. Second of all, there are 330 million people in this country. And if you take 10% of them, that's 33 million people. So there are 33 million people in the top 10% who can easily afford to go spend $1,300 to go see a concert. And it's not tickets, it's the whole thing. The tickets, the trip, the getting there, the hotel, whatever they do, all the, that's, and they count the economic effect. They're saying, what did you spend to go see Taylor Swift? How much was your weekend? It's just like if you go to Disney, how much was the trip, not how much were the tickets. So yeah, the top 10% of the people in this country can still afford to do anything they want. Why? Because the top 10% of the people have most of their money in stocks or properties or things like that, or in businesses, which are also stocks essentially. So those people not only get adjusted for inflation, but they actually benefit from it. Like this market run we're having, right? People benefit from the inflation. We are up 40% a year in our small portfolio and 700 a month portfolio. We're up 40% in 2 months in our long-term portfolio. We're benefiting from the inflation. We're benefiting from this economic madness, even as the bottom 80%, right, which is 330 times 0.8, 264 million people can't even, they see a $400 concert ticket for Taylor Swift and they're like, I can't go to that. They're not even thinking about the hotel cost and the airfare and the $20 Coke at the concert and things like that. They're just talking about the ticket price. They're like, this is insane. I can't go to this concert. They don't know where they're going to get gas next week. They're going to go to a freaking Taylor Swift concert. That's what, again, it's supposed to be a positive day. So that's my problem with the economy, is that, you look at this, and even Bodie did it, because what's that thing they call flooding the zone? Yeah, flooding the zone. So it's this thing where we're being hit with so much information and so much conflicting economic data, and so many things are going on. And they actually got to the point this week where we did forget about what's his face? Oh, see, I forgot his name, Epstein. So we actually forgot about Epstein, because this Fed thing is so insane that like it pushed Epstein out of everybody's minds, because Trump's like firing Lisa Cook now, and he's mad at Modi, so he's taking the 50% increase. No, 25%. I don't know, some ridiculous increase. It seriously is at the point where I cannot keep track anymore. I just do not have the energy to pay attention to every freaking thing that's going on. So whatever the number was, I'm sure I can find it here. Modi, yeah, no, commodities. Yeah, 50. Okay, Trump slaps India with 50% tariff. So I think it's 50% total. I think it was 25 and now it's 50. And again, it's the same. It's also the same concept. It changes so often and so fast and for no reason, with no timeline, that it doesn't make sense for my brain to try to remember this. Doubling the 25% duty. I'm pointing my finger. Doubling the 25% duty. It's noise. until it becomes a real thing, it's just noise, because he says he's going to do this and he says he's going to do that, and then he doesn't do it, and then he extends it. He just gave Putin 2 more weeks to kill, to bomb Ukraine, although he's getting his ass kicked this week. Ukraine's bombing the crap out of Russia right now. And then again, I just don't have time. I don't have time to follow up all the things that we're supposed to talk about. Because Trump gave Putin 2 more weeks, but the whole thing is ridiculous. You have Putin attacked Ukraine. He occupied their territory and he started a war. And you want the war to stop. And the terms that are being offered to Ukraine is Putin keeps all the land that he took, including Crimea, which he took, 10 years ago and never gave back. So Putin, and because why? Because last time Ukraine signed a treaty with Putin and said he would never attack again, and the NATO would back it up and blah blah blah. And meanwhile, all Putin did was use it for a springboard for his next attack, which is the one he's got now. So now he's taken tons of additional land in Ukraine, and now he's saying, okay, I'll sign another agreement that says I won't attack again. And Ukraine's like, this is bullshit. Of course it's bullshit. It was bullshit last time. So now he's saying, oh, let me do that again. So I can now I'm surrounding the main part of Ukraine with my forces. And if I sign a treaty now, I'll just build up my forces until I decide to ignore it again. So what does Zelensky want? Zelensky wants security guarantees with teeth, not some bullshit that NATO will support you, because NATO did not support you and the United States did not support him properly. And that's why Putin rolled into the country. But again, going back to that, even if there were guarantees, Putin saying, I want all the land I took plus 33% more land that I'm trying to take but haven't succeeded in. This is madness. This is as if somebody had invaded America and they took Florida and Texas and they took the New England or whatever, and they took Illinois and Michigan or something like that. And so they had those edges coming in, and they said, okay, we'll stop and have a peace treaty. You let us keep all these states, plus give us New York and give us Maryland and give us Pennsylvania, and we'll be happy. Who would agree to this? It's like, get the fuck out of our land. Like, that's what a peace treaty is, or at least give back some of what you took. Don't say, I'm not only not giving back anything I've taken, but I want more that I'm not even in. I want land I'm not even occupied. How is that even a thing? So again, it goes back to the whole concept of like, I just can't, my brain is learning not to waste its energy on bullshit. And bullshit is basically anything they say in Washington is basically bullshit until it's a law. And then even then you have to wait until it goes through the courts and gets adjudicated because it might change. Because the stuff they do isn't legal, isn't constitutionally valid. But that doesn't matter anymore either. And that's another thing. You can't even count on and again, now I'm going back to my negative thing. You can't even count on the freaking Constitution, which is what I wrote about yesterday, because they're not paying any attention to that. And it used to be that, and this matters. You know why I get upset? Because it matters to me, because I have to predict the markets, and to predict the markets, you need something to be real. And if I don't know that a clearly written law in the Constitution is going to be upheld or followed is out the window, but I don't even know if it'll be upheld by the Supreme Court. They just randomly let Trump do whatever the frick he wants. It's written in the Constitution. These are the same guys who are patting their pockets all the time and saying, I carry the Constitution with me. It's a sacred document, blah, blah, blah. Now it's out the window. Now they're guys in charge. They're like, what Constitution? That old thing. And this is the problem when you lose your focus as a country, when you let the laws get thrown out, even if it's for your side, even if you're happy and you're owning the liberals or whatever bullshit, you're still causing an environment in which businesses can't make plans and which investors from other countries say, not that crazy place, no thank you. And we're already getting it with tourists. Tourism is way, way down because we don't seem like a stable place. We don't seem like a place you want to send your children on vacation or go with your children on vacation. We've got troopers running up and down the streets in cities. It's not pleasant. You know, I went to took a cruise with kids when they were pretty young, maybe 8 and 10, something like that. And because they were mobile, I remember they were mobile, and we got off the boat. We went into this town, but I know what it was. It wasn't the planned town. The boat got diverted because of a storm or something like that. So instead of going to the place we were supposed to go, we went to some random port town in Mexico. And literally, it was like Jurassic Park. It had a gigantic gate that the cruise people went through, and the whole thing was surrounded by walls, and there were freaking armed guards with machine guns and crap walking around all over the place, presumably to keep out the whoever was in the jungle behind the walls. I mean, it must have been like T-Rexes and Velociraptors, because they look serious about keeping people out of that place. So it's a nice little town, and it's got like bars and places to go and little touristy shops and stuff. But I'm just wondering, like, what is outside these walls? They don't want to have any contact with the tourists who are coming on the boat. It was so weird. That's what the United States feels like to tourists now. They're just like, they come here and they go, what the hell? I mean, I was in New York, and they were, you know, there were jeeps unloading soldiers in the middle of the street. Just all of a sudden, a jeep pulls up and soldiers come pouring out of it, you know, fully armed, like as if there's like something going on. I thought there was an actual event, you know, something bad happening, but they just came out and started walking around and patrolling. It was like, that was just how they get delivered. And it's, I don't know, for me, it's unsettling. You know, I'm not a gun carrying person. I'm from New York. I'm not from a gun carrying part of the world. And so when you see a whole bunch of people with military weapons walking around, you start being concerned. Yes. Anyway, so where were we? Oh yeah, consumer resilience. So yeah, so everything is hunky-dory for, you know, my kids and your kids, because we're all in the investing class. We make money when the market goes up. We're happy and we make money, and we outpace inflation. We outpace inflation because the companies that we invest in are leveraging dollars and using inflation to their advantage. The inflation puts more money to their bottom line, and it grows their earnings, even if their earnings are less. Even if they actually make less money, even if their margins shrink, it's still more money than it was, right? Because if it was 100, you know, whatever number, if it's 100% with before inflation, and they were making 8%, and now it's and that would be $8. Now it's 110, and they make 7%, but that's, I don't even know. It's more than 8 of it. So wait, 110 times 0.07, no, 7.7. Well, you know what I mean. Anyway, so that's not a good example, but the point is their margins can be shrinking, and it looks like they're making more money. That's what I mean, though. But again, how do you look at this from the bright side? Well, people are spending money, they're going out, they're doing stuff, they're having experiences, blah, blah, blah. But this is, to me, you know, let us not forget there was 284 million people who can't do this and don't have the money and aren't having fun. Intel partnership, America's Semiconductor Independence Day. So does this assure that America never again depends on foreign chips for national security? Are we building the world's most advanced semiconductor ecosystem, or are we allowing Intel to continue to make non-competitive chips by blocking out all competition of superior chips? Are we preventing American companies from buying superior chips from other countries and forcing them to buy crappy Intel chips? This is exactly what Russia did. That's why Russia fell apart, because they said to the people of Russia and to the corporations of Russia, you know, I'm talking about, you know, when the wall fell back in God knows when that was, 1980 something. Why did Russia fall apart? Because they insisted that Russians buy Russian goods and Russian factories produce subpar stuff, and Russians had crappy cars and crappy missiles and crappy TVs and crappy everything, because they had exactly what we're doing now. The government would favor companies that were Russian and force a market, but it was a bad market. It was an uncompetitive, bad market, and it was bad for the companies that were using the crappy Russian copy machines and the crappy Russian phones and the crappy Russian cameras and all the crappy stuff that Russia had, because they couldn't compete globally using that stuff. They were paying too much money for no good equipment. So it snowballs. Not only that, but no, forget AMD. Let's just pretend it's a new company. So some new company comes up with a better chip design than Intel, brings it to venture capitalists and says, we've got this chip design that's going to make cheaper. In fact, we've gone the next step, and we're going to make these chips according to Moore's law, which Intel obviously invented Moore's law, but maybe they don't follow it anymore. Maybe it's dead to them, but some other company comes along and says, no, now we've got the next level in innovation. We're the ones that are going to make a chip that is 1/10 the price and 100 times faster. We're the ones that are going to do this now, because Intel hasn't done it for the last 10 years. They haven't managed it. But we figured it out. We've now made that breakthrough that they've been lacking. So that's great. So they sit down with me, and I'm a VC, and they say, well, we're going to need $10 billion to build a fab plant and do this and that. And I'm a VC, and I'm like, so you're asking me to spend $10 billion to fight the US government's company? I'm not going to, even if I look at the chip and say, yeah, it's a better chip and this and that, I know that the government has a vested interest in Intel doing well. So they're not going to just let me make a better chip. They're going to figure out a way to stop it, to refuse to give us a patent, to tell us that it violates some kind of security law, to have the Justice Department investigate us. You know, I'm going to worry about all this crap. My risk factor for investing in them, in the very least, my risk factor for investing in this new company has gone up significantly, because now my competitor is not Intel, it's the US government. So what have we done? We have stifled innovation. We have ruined the whole concept of capitalism by doing this sort of thing. And it's not just Intel. Trump is going for the defense contractors and a whole bunch of other things. In fact, defense contractors makes more sense, because you don't want your defense contractors just selling to whoever they want, and you want to make sure that things are kept a certain way. But still, there's a reason we don't have government defense contractors, because the private system does work better. Capitalism does work. There are things that do work about capitalism, and this is the main thing, and we're taking that away. That's not good. Let's put it that way. So labor market evolution, the great rebalancing. Yes, the jobs market was too hot. You cannot complain about slower job growth and higher unemployment when we clearly had too much wage pressure and not enough workers to fill companies. This is okay. It may become not okay, but that's the problem with Fed balancing, right? It may become not okay if it gets much worse. But at the moment, this is what we needed, is a correction back to what is still historically high levels of jobs. That's a cause of inflation. Wage pressure is a cause of inflation. You want to find an equilibrium at some point, but you don't want to, the equilibrium still is too much in favor of the companies. We aren't paying the workers enough. That's a problem that's been going on for a long time. We never fixed the workers' incomes due to wage pressures, and housing prices never came down. That's another huge problem. Stock market resilience. So we're hitting new time highs. American capitalism can thrive under any conditions, even when it's being destroyed. It can still thrive, apparently. But again, that's just an illusion. That's just it's just a scratch, thing from the Monty Python Night. It's like, oh, it's just a flesh wound. It's like, no, at a certain point, you're going to realize you can't continue functioning like this. But for now, sure. So what? We can't do this. They're taking over the companies. They're doing this and that. They're tariffing. None of these things have really affected us yet, but they will. It takes years to realize that you've destroyed innovation by publicizing companies. Publicize. It's not even a word, right? Privatize is a word. Publicize. Oh my God. It's terrible. Socialize. Let's call it social. It is. It's socialism. That's what they're doing. They're taking over companies. That's communism. The state is taking control of corporations. If a Democrat was in office doing this, I mean, they would have guns in the street. That's how bad this used to be to a Republican. The state is taking control of corporations, and they're like all on TV being like, isn't this great? And see, and you say, oh, well, they want to raise revenues and blah, blah, blah. Okay, fine. But you know what? Biden just wanted to raise the taxes on corporations. He didn't want to take control of them. He just wanted them to pay the correct amount of money in taxes. Taking 10% of the company is way worse than taxing them on their profits. 10% of the entire company is more. A permanent 10% of the company is a lot worse than taxing them an extra 5 or 10% of the profits. Oh my God. I can't believe I even have to say this to explain it. It's just, and again, it's not you guys, it's just like the vast audience that listens after the fact to the webinar. We get a ton of people on YouTube and so on and so forth, but it's crazy. How is this not obvious stuff to everybody? The innovation economy, America's startup renaissance. It's .com again. How did I get into this thing where I'm negating everything that's being said? I wanted to have a nice positive article, and that was that. But yeah, it's like, okay, fine. Everything with the word .com on it is now worth 1,000 times earnings. We did this already. We already did this. You can't say that's innovation. And yes, there was innovation. There's these companies around now, Amazon, Google, well, not Yahoo, but Yahoo used to be around. AOL is still around, whatever the hell form they're in these days. Yeah, some companies innovate. Some companies come up with things. Google came up with I think about this now because anything happens to Google, everything still relies on Google. It's like if Google stops indexing the web, who's going to index the web at these vast amounts of money that Google spends every year? Who's going to do that? Who's going to pick up the slack? Google should be publicized. Google should be taken over by the government, because God help us all if Google stops indexing the web. especially at the rate the web is growing. That's a problem for Google too, because it's costing them more and more money to index the web. So much that their freaking thing crashed today. The fastest pace of new business formation in decades from blah, 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 blah. Okay, whatever. So global leadership, the indispensable nation. Oh, this is a fantasy. The world still looks to America for leadership. Oh yeah. I was gonna say whoever wrote this doesn't get out in the world much. It's Bodie. Where does he go? He doesn't go anywhere. I gotta ask him that question. I have to ask Bodie, how much do you get out? How much, like, does he look at the America from the global perspective, or is he kind of always using the American perspective? Does he, because we all do, all you guys, this, right? Because like we all read, but I don't read Le Monde every morning. I don't read Der Spiegel every morning. I don't read the Japan, whatever the hell they have in Japan. I do read the Chinese Morning Post or whatever the hell they call it. I do read that one. I look at Al Jazeera too. But in London, I like the London Times on the weekend. So okay, I do read internationally. But the point is that even so, it's a whole different ball game when you go and travel to another country outside America. And I don't mean a tourist country. I mean when you're like in Germany or in London or at Brussels or in Bangalore or something like that. And when you just are like living there and watching, and I mean living like, again, not vacation-y, but just to sit there for a week or two like a business trip and to actually just wake up, go to work, have meetings, talk to people, and read the papers there and watch the news there from their perspective, and then think about how they look at America and how they feel about what we're doing and so on and so forth. It's a very different thing. You can't pretend that you have this thing. Like TV, I watch BBC on the weekend too. I like to try to get like that international perspective, but it's never the same as actually like just getting yourself out of the country and looking at it from the outside. Because our universities, tech companies, blah, blah. In fact, China just made fun of us because Trump said he's going to let 600,000 Chinese students in. And do we even have 600,000 Chinese students in our universities? I'm not even sure if that's the right number. But all of a sudden, he's like, it just reverses. Everything he said before is now reversed. And China's comment on that was like, well, I guess it's better than excluding them. It's like, but what they're trying to say is like, well, we don't, we already moved past that. There's a lot of universities in the world. We just don't want to. And again, if the guy's going to sit there and change his mind every 6 months or every 3 months about whether or not people are allowed in, do you really want your kid going to Harvard if you're from China, as opposed to Oxford or Cambridge or something like that? Do you really want your kid to go to Harvard and be subjected to the whims of the president and whatever he wakes up that morning decides? Like he could just decide, oh, we're back at war with China, all Chinese are getting kicked out. I would probably argue, if I was a Chinese parent, I would probably argue strongly with my kid against going to America. I'd be like, go to another country. Why put yourself in the situation? And then we talk about Taylor Swift as an economic force. Oh, I'm sorry, we already did that. I came afterwards. So anyway, yeah. She is amazing. I mean, it's just like the numbers involved that this woman's involved in. And by the way, we did a podcast. Do we have the podcast? Here's the podcast. The podcast is actually it doesn't link properly. The podcast is actually way more in depth than the post. The podcast goes into like all the stuff that Bodie and I looked at. We dumped in all the research we had done, and it's actually very intense, talking about the rock star economy, basically, and what happens in the arena crowds and the trickle down effect of the venues and so on and so forth, and the impacts. It was really good. It came out really well. I was very happy. Anywho, so that's where we were there in our morning report. And then, as I said, Zephyr chimes in with his thing and Warren gives his report. And then, now it caught back up. Oh no, then Phil gave his report with the news he's reading that wasn't mentioned so far. And then we looked at the watch list. And the watch list has Barrick Gold. Look at the month. I mean, look at August for Barrick from 21 to 26. So that's a nice, that's a 20% move at least. AGNC, that's still a reasonable price for them. They wouldn't be here if they weren't a reasonable price. That might not look like it, but they really haven't gone anywhere. CIM, ARCB, BAX, very cheap. Best Buy, to me, Best Buy isn't getting tariffed. Best Buy is just having increased cost of goods because of tariffs. But it's what's bad for retailers like Best Buy is it's an adjustment period because they've got to remix their products. And then the question is really, how good is Best Buy at remixing their products? Because it hasn't happened in a long time. Walmart and Dollar General are amazing at remixing their products. They have systems where they are watching, Amazon too, Amazon's another one. So they know what you're buying, they know what's sitting on the shelf too long, they know where their margin sales are, they know what sells on the third shelf down on the right. They've got every possible metric and running statistics and analysis on every single thing, and they're changing their orders and adjusting their mixes and things on the fly constantly to make sure they maximize every penny out of every inch of their stores. So when inflation hits, when an event hits like this, like tariffs, they are less affected than their competitors because they have better systems. They just have better systems. Does Best Buy have great systems? No, they do not. They're not like that. Electronics hasn't been that sensitive over the years, so Best Buy hasn't had that need to worry about whether or not something went up and down 5% or 10% or whatever. Whereas in Walmart, that's a life and death thing. A 5% increase in one shampoo can cause it to disappear from the shelves very quickly at Walmart and be replaced with other shampoos that are a better price. So that choice is even removed and not even a thing on the shelves. And believe me, there's a lot of people whose whole company goes down the tubes when they make mistakes like that with Walmart. It's like, you better, and Walmart's constantly squeezing their vendors. It's like, you better be offering us the best possible price, and you better be competitive with everything else that we have in the store, or we can't keep you. It's a real simple formula. It's like, if you're not making more money per inch in the store than a competitor, we are going to give the competitor more space and you less space. That's how it works. There's no loyalty at all in that model. It is a constant fight for survival, and everyone has to be on top of everybody else, fighting for that space at Walmart and fighting for the customer's attention, and the product has to move. It has to go through, it has to drop money in Walmart's pocket. And even that matters because then those companies have to then put pressure on their suppliers to keep things lower and get things cheaper. Otherwise, they're going to lose the race. And it never stops. There's always going to be somebody else attacking. You talk about a dog-eat-dog businessman. Oh. So is Best Buy that good? No, they're not. And Best Buy has a lot of appliances. So you got to watch durable goods very closely with Best Buy. They've got about a third of their store, a quarter of their stores is appliances. And appliances are getting killed. And they used to sell CDs. Frankly, I got to go to a Walmart because they used to sell like rows and rows of CDs and DVDs. Do people even buy those anymore? I don't think people even buy those. I sure don't. I haven't bought a CD in 5-6 years, or DVD. I don't even have a thing in my computer for it anymore. I used to have a disc thing in my computer. It's gone because who the hell needs it? Cleveland Cliffs. How well are we protecting domestic steel? And again, they're benefiting from protectionism. Crocs, Crocs had earnings. Yeah, I can't click on this. It's not going to work. Oh, what the frick is that? Oh, that's interesting. Nope, it's still not the right calendar. All right, go away. Still not the real calendar. Crocs. So I love Crocs. They had earnings. The earnings were not great. Well, they were. I mean, they were great. The guidance wasn't great. Sorry, the earnings were good. But they've got tariff issues and they got to worry about where they're going to be. But still, I think this is stupid. This is way too cheap. Well, obviously it was way too cheap. It bounced already. But their gap earnings were shit. But the non-gap was fine. They were fine. It was adjustments that killed them. It wasn't anything bad. And revenue was up and everything's, you know, they're okay. They didn't deserve to get killed that much. So they're still viable. Dow Chemical is crazy cheap. Oh, I'm sorry. I was gonna. Yeah, they're trading at 7 times forward earnings. Crocs. You know, they got good growth. The earnings are coming back. They're in generally good shape. They're just stupidly priced right now. Right. So ES is energy services, future fuels. I like future fuels, even though, you know, alt energy stuff is out of fashion and Trump's not supporting it, but still people need this stuff. FMC is still cheap. GIS is still cheap. GNRC, even though it flew up on earnings, is still actually cheap compared to where, you know, for their growth. Jack in the Box, nobody likes Jack in the Box. I think Jack in the Box is fine. Kelly Services, another one, you know, with weird labor market and stuff, I think they should stay well. Nice butterfly play for these guys. I don't think they're going to go up much, but they're solid here. Kellogg, Giant Pop. Kraft Heinz down here is a triangle squeezing, probably going to go higher. Carmark, 60, whatever the hell, 61. They should be popping higher. Lockheed Martin. The second, in fact, frankly, we should have jumped in the other day because Trump said, I want to change from the Department of Defense to the Department of Defense or something. Whatever crazy thing he said. He basically was like, I don't want it to be called the Department of Defense because sometimes we want to go on the offense. Which again, it should have terrified people, but it didn't because there's just so much stuff going on you can't possibly keep track. He literally said he wants to change the name of the Department of Defense because it doesn't reflect the goals of being offensive. But it's fine. Everything's fine. Don't worry about it. Don't worry. What else? Oh, so then Gemini, the aforementioned evil thing that didn't work, it wasn't working, so I used Comet. And Comet is, you have to download the whole thing. It's a browser by Perplexity. I don't know if you have to pay for Perplexity. I do pay for it. It's a browser from Perplexity, and it does the same thing that Gemini does. So in other words, I'm in Chrome now, and embedded in Chrome is this Gemini, and I can pop it up whenever I want to and ask it questions. Comet is different. Comet has a thing here that says ask the AI or whatever. And if you do, it sort of just brings up a window on the side for the AI. But it's the same thing, though. It can see anything on your screen it can see. That is incredibly useful. Whatever you see, also, especially because a lot of browsers, and rightly so, can't read behind a paywall. So in other words, if there's a paywall of some kind and you ask it to look at an article, it can't because it's not a technically paying customer. But this is how you this is how the AI companies are getting around it. They're saying, well, I'm a customer, I paid, therefore my AI is allowed to use my paywall. And so when I click on an article and it goes through the paywall and now you can see everything, I can now use my browser to ask me to the AI in my browser to run questions through it. So unbelievably useful. And especially because I can go to Seeking Alpha and I can say, here's all the news, give me a summary, blah, 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 right? And that's basically what this is. So here's a comprehensive categorized market summary detailing the critical news items since the market closed last night. This roundup covers major macroeconomic, corporate, and market themes. That's essentially repeating back what I asked him to do. So he breaks up into categories, and it's the same crap. We know all this stuff basically, but just want to be sure if anything's changed. But more importantly, though, once he does that, I then say to him, well, looking back at the news since he opened today, what are the potential swing trading ideas? What are short-term trade ideas that we could use to take advantage of the news? Then he goes through them, and he's talking about NVIDIA's earnings are coming up, and he thinks a long on NVIDIA is a good idea. Now, again, big disclaimer, this is what Comet in this case thinks. And I don't think Comet's as good as Gemini at thinking, but this is what Comet was thinking. I don't think this report is as good as the one that we usually get out of Gemini. But still, I mean, he's got reasons and so on and so forth. So he says NVIDIA long because of that. In new tariffs in India, this is clever. Short Indian exposed ADRs like these, or go long U.S. textile and machinery plays who will win on the tariff side. These are both excellent premises, and there are enough companies here, I guarantee if you dig around, you'll find some really good ideas. And what do I mean by that? Because I want to short people who are overpriced. I don't know what these are. I know Infinity, but I haven't played them in ages. But if these guys have high multiples, if they've been on a tear, this can cause a pretty good pullback in them. Whereas if these guys are particularly cheap, then let's take a look at that and see if anyone's trading at a very low PE, has a growth story besides just the tariffs. And now the tariffs are going to give them a nice kick to go higher. And these are not stocks people are probably putting a lot of money into recently. So there's some great ideas there. Dovish Fed signals a rate cut. Long rate sensitive stocks. Well, that's good. REITs. We are already long REITs. That's been our premise for a while. We have a whole bunch of REITs. In fact, in the watch list items we just went by, there were 4 or 5 REITs. Why? Because I like the REITs. I think they're way too cheap because rates are coming down. Even if they shouldn't come down, they're coming down. Come hell or high water next year, Trump is going to make sure the rates go down. It doesn't matter how much economic damage it does. It doesn't matter how wrong the policy is. It doesn't matter what the negative repercussions are. He's making the rates go down next year. I think that's been made pretty freaking clear to people. Then why are REITs not getting the love they should be? Then we got Mongo. And Mongo has had some amazing growth. They just announced higher guidance and everything's going great for them. They already popped though. I would have this conversation with Bodie because they're asking Bodie, who do you think is going to be good? And he said Mongo, and I said, really? They already went up 20% today. And he's like, oh, did they? Oh, sorry. Because that's what this one's saying. He's saying expect 8 to 12% follow through. It went up 20% in one day, and it wasn't cheap in the first place. Coles went up like 30%. So, yeah, it's not a long idea. And I don't blame Comet because Comet is certainly not that smart, but I do get angry at Bodie if he makes that mistake because he's got to know better. It's like, dude, this is 7-10% upside. I agree, 7 to 10% upside makes sense. This doesn't make sense. Maybe if it resolves. 17% they're up. Well, there you go. It doesn't make sense because it was already up here. So this doesn't make sense. It didn't make sense when they popped last time and they came back down. Now they're going to pop here and come back down. I'll give him 15, but I won't give him 16 something, so you can't call it a long after it's already taken the move. Okta came up on guidance, and again, it's like I don't want to chase something that's already jumped up. I want to find something that people are not paying attention. Abercrombie was terrible, and they're probably going to keep going down. That one's correct. Trump is continually weakening the dollar, so therefore companies like, oh, that's funny. I was just talking about that. Large cap companies with significant overseas sales like Microsoft, Apple, and McDonald's should do good. Rising industrial sector momentum. Yeah, some of the industrial ETFs should do well. Blah. Healthcare stocks rally led by Lilly, which we talked about before, was oversold. Long Lilly, oh Lilly, or XLV Healthcare, and that's that. Then Bodie takes a look. Okay, so this is Bodie's job. Now he's smart. So he's got to look at the right thing. So he looks at the same things. He says, NVIDIA, market is waiting for the after hours results. India tariffs, 50% tariffs. Oh, no. He's saying, oh, I'm sorry. He's saying what was talked about already. He's just repeating what was said above. Then he says, what's actually tradable? Coals, already up 20% today. Move already happened. MDB up 34%. Move already happened. Oh, that's an interesting one. What happened to them? MDB. Ooh, still up 35%, so it hasn't stopped. Abercrombie and Fitch, still actionable. NVIDIA, it's a binary risk. He doesn't like it because it's like a coin flip what happened to them on earnings. So he only found, so his job, and by, and again, this is why he's so excellent. This is the difference between an AGI and an AI. Bodie is instructed to find the top 3 trades, yet he doesn't see 3 trades that are worth trading today. Therefore, he says, I just found one high probability trade, and it's that, and shorting Abercrombie, shorting Abercrombie and Fitch, because it's ANF and it's Abercrombie, and I say Abercrombie because my brain is mush. I guess is probably what the problem is. ANF. Yeah, not bad, and not actually falling from that. Look at this for you, 27% beat too. Jeez. And he gives his reasons. The Q2 results were mixed. Record sales, but the Abercrombie brand is down 5%. Core brand weakness. Comparable sales down 11% for the main brand. Wow. Only Teen Hollister is growing. See, now you're losing me because I'm only vaguely aware of that name. Unchanged guidance despite, oh, that's scary too, yeah. You got a record quarter, but then the guidance is the same for the year. That's weird. Why this works. Growth deceleration in premium retail is a dangerous signal. The stock is only down 4%. There's more room for downside. After 2024 rally needs correction, the valuation is stretched. Aha. So let's take a longer look. They're only trading at 9 times earnings. I don't know. I don't know if I'd short them. Nah, I would stay away. See what we're gonna have a triangle squeezy thing. That's when you want to watch them, when this guy and this guy meet up, these averages, and they're gonna squeeze together, and it's gonna keep going like this, and then eventually it's gonna pop, probably to me, to the upside. I don't think things are that bad. Oh, Bodie's really specific, isn't he? 58, enter at 58.25, target 52 to 54 range. Wow. Stop at 61. 3 to 7 days as momentum sellers exit. Very interesting. Except for the numbers are completely wrong. It's 96. Is he serious? Dude, you didn't even know what the number is. Yeah, he's got the totally wrong numbers. That's bad. Wonder where that happened. Maybe everybody's glitching today. Why everything else is untradeable. Big movers already moved. Kohl's, great story, terrible entry after the pop. AI infrastructure is correct, but the move has already been captured. NVIDIA is binary. The ADRs from India, the tariff impact is already known and priced. I disagree because Trump just added 25% more, but did he add it to those particular companies? We'll have to see. And again, he only threatened, he didn't actually do it. REITs on rate cuts. Fed uncertainty makes timing impossible. I don't agree. I think for sure that when Powell is out, that I'll tell you exactly what's going to happen. No matter what the Fed does, when Powell is out, the next meeting after that is going to be a half-point cut with the new person. Otherwise, Trump wouldn't be appointing him in the first place. Dollar weakness, political noise, not sustainable trend. I don't agree with that either. I think we're wrecking the dollar. And by the way, I would have already argued these points with Bodie, except it was time for the webinar, so I just pasted whatever he put, and we didn't have a conversation about his things. I would have caught that that complete price mismatch. Today demonstrates why entry price matters, blah, 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 market outlook, blah, 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 blah. And then we're in the webinar, and it's webinar time. What do you know? Here we are. So there's always opportunities. You just have to learn to find them. And what we've done in prior days, I'll show you yesterday, for example. La da da. We had a top trade alert for ULCC and AT&T. Dun, dun, dun. So here, durable goods. Look at this is terrible. That's what I was talking about with Best Buy. Look at durable goods. The down, down, up, down, canceled by that for sure. Up, up, down, canceled. Up, up, no, canceled. Up, canceled. That's canceled for sure. This is canceled in a bit. A little up, a little big up. Half of that is canceled, then this great big thing, but then half of that is canceled, and then more canceled. You know, effectively no progress. No progress since 2023. That can't be good. You should have some progress. You should have some more positives than that. And the positives were like bursts. And if they're bursts, that means most likely it was aircraft or something like that. It's most likely Boeing orders, and it has nothing to do with the overall durable goods. Consumer confidence also is just ticking. It's just drifting down and drifting down. And the most important things is the present situation. Because expectations, not that they're any good, but expectations are a guess. What do you think things are going to be like in the next 6 months? Oh, I think they'll be better because Trump says it's going to be better. Or I think it's going to be terrible because Trump says it's going to be better and he's full of shit. You know, whatever, it's still somebody's opinion. Especially when you're talking to a consumer, you're not even talking to a professional. Present situation, how is your personal economy? Do you have more money or less money? Are you more employed or less employed than you were? What is going on now? That's a question a consumer can answer. Well, I just went to the gas station and I had to stop the gas pump at 30 bucks because I don't have 50 bucks to fill my tank all the way up. I only have 30 bucks this week. Hopefully I get my paycheck on Friday and there's no surprises and I can then buy some food. But right now I got zero because I just spent it on gas. That's what a consumer knows about his personal situation. They know exactly what's going on. I hear that all the time. I live in Florida, and a lot of people here are on fixed incomes, and I hear people say all the time at this time of the month, 8/27, with only I can't even do the math, 4 days. I literally could not do the math. With only 4 days to go until the end of the month, I hear over and over again from people, I don't have any money until until Sunday or Monday or whatever day it is. That happens. People are on a monthly budget and they run out of freaking money. That did not used to happen. And that's happening all over America. I mean, you read the statistics and they will tell you that the majority of Americans, 60% of the people in this country, have no money in the bank, not a penny, and they are living paycheck to paycheck. And that means that if we do have a surge in unemployment and 10 million people are thrown out of work, those 10 million people have nothing. They can't sit around for a few months waiting for a job to come. They don't have the money to pay the rent next month. They don't have the money to pay their healthcare thing next month. Groceries, food, all that stuff. If the paycheck stops, they stop. That's how you can have a very deceptively weak economy, because we right now have pretty much full employment. Everybody's got a job, but they don't have money. So there's no personal savings backing anything up. There's no social safety net either. And so everybody is just scrambling from month to month to month, just trying to make ends meet and trying to stay like a couple of steps ahead of the debt collectors. And God forbid anything goes wrong. And this happened during COVID when everybody lost, whatever the situation was. Don't forget the government spent $11 trillion bailing out of COVID. And they stopped people from falling through the cracks, and they paid the bosses to keep you employed even though the business was shut down, which is crazy. That's just money down the drain. But again, the alternative was a disaster. But now we're $37.5 trillion in debt already. And if we have another $11 trillion crisis, how the hell are we going to pay for it? Yet for some reason, Kennedy has decided to stop vaccinating people for COVID, even though there's currently a big spread of Omicron COVID going on in the country. So, that's the thing, you're an investor, you got to think about like long term, what's the plans? People are seriously saying, my present situation is getting worse and worse and worse and worse. That's my present situation. My expectations were never good in the first place, and they're getting worse. And the last time they were this bad was when the economy collapsed. So, and then don't forget, this is coming off the 08. So people, present situation, nothing like it was back then, but this was after the massive, massive collapse. But expectations are already down there. We talked about trading, companies trading into the S&P, and then same thing happens with the Dow. So like the S&P you look at today isn't the S&P that it was, a few years ago. It's, so many different companies, it's hard to even say it's the same thing. This was talks about positioning. This is our UUU trade, which unfortunately it went up too much. UUU went up too much, and it went all the way spiked up, and I said calm down, it's coming back already. you know, we'll adjust it when we have to, basically, is the answer there. Oh, so here's the news yesterday. This is done properly with our friend Gemini here. It's very similar. It's not that this is not a lot different than what Comet came up with, as far as like the way it's organized and so on and so forth. But you see, here's the difference. See what you see the detail level here of the Gemini. So AT&T, it's a swing trade bet being long, and here's our duration and expectation for this bet, so on and so forth. I like the report better. And then yesterday there were 3 ideas. Bodie liked AT&T, and I agreed. See, that's my trade. Then I put a trade idea in. That's my symbol. See, this is me. The AIs will get a symbol. I have to get a symbol now too, otherwise it gets too confusing when I'm talking in the same thing as an AI. I put my little symbol in, and so we had 2 ways to play AT&T. This one is net $18,000 on a $70,000 spread. It's $34,000 in the money for $18,000. That's great. We collected $63.50 for the first 87 days. If we do 8 more quarterly sales next year, we'll get $50,000. That's 270% upside, 270% of the 18,000. And another $51,000, which is 273%, if we make it to our goal at 32, which is not that far away because we're at 28 now, or 29, whatever it is. So this is a fantastic play. We sent it out as a top trade. Frontier Airlines, Spirit bankrupt. And if they were just bankrupt and they were reorganizing or whatever, I wouldn't be excited, but they're giving up their routes to Spirit. Spirit to Frontier. Spirit Airline is giving up 20 routes in markets that they're not going to come back, and they aren't going to come back and compete against Frontier because they've given them up. They're gone. Frontier's not giving them back. They're not going to go, oh, Spirit, you feeling better now? Here's your routes back. That's it. It's gone. They lost them. That was part of their reorganization. So Frontier, who bought the routes now for pennies on the dollar in bankruptcy, have a much lower cost basis for the same routes that Spirit was flying. So therefore, even if all their other costs are the same as Spirit, and they're not because Frontier didn't go bankrupt and Spirit did, so obviously Spirit had problems, Frontier did not. So anyway, all other things being equal, they're making money because they have a lower cost of the routes themselves. Their fees that they're paying for these routes are lower. So the thing I liked about them in the end, and the reason I made them a pick, is because Frontier has no earnings. So sounds terrible, but are you going to sign me in? Sometimes you can like a stock because they don't make any money. Oh, frick, what are they? Frontier. There, ULC. Oh, it was ULCC. See, I was thinking that was wrong. So it's a $1 billion valuation. And look at the revenues. It's 3335 37 3742. And they're right, because they are going to be taking over new routes that they didn't have before. And they're at essentially, and they were already getting there anyway, they've had losses. They started coming in 37, minus 37, minus 11, minus 33. Sorry, that's not a year. Minus 37, minus 11, minus 154. I don't know. You know, they spent money this year to do this, but now they're getting the big boost. And next year, 65. 65 is dramatically different from negative. And they don't have debt. They don't have money in the bank, but they do. I'm sorry, they have $228 million as of last year in the bank. So they can afford the losses on the way to profitability, treat it like a startup. And so at $1 billion, if they make 65 million, that's about 14x. 1100 divided by 65, 16.9. So that's 16.9x of this year. And if they get to $1 billion, or if they get to $110 million, they'll be at 10x. And suddenly a worthwhile company with good growth. See that revenue? That's the key. Revenue keeps expanding. They are gaining traction. They are making money. Of course, net profit's going to be uneven while they're trying to grow. And they also don't have a lot of breathing room because they're not far from bankruptcy themselves. But it's an airline. Airlines are incredibly insane businesses. But if they can get over the hump, and by the way, I picked Alaska Airline when they were nothing. Where's it? Alaska, ALK. Everybody said I was crazy when I picked Alaska. When was that? It was a long time ago, years ago. Down around here. Yeah, 23. So when Alaska came way down, I picked Alaska, and everybody was like, "What are you talking about? Alaska Airline? They're about to go bankrupt, blah, 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 blah." And all of a sudden, 100% gain. And I liked them. They were good. They were good, solid operators. They were just in a downtrend, and they were turning things around. And they bought Virgin's routes. Same thing. They bought Virgin's routes when Virgin gave up. And as usual, as with any airline, they're almost bankrupt. They're highly endangered species. But look at the debt here, though. $2 billion in debt. And they're got a $7 billion valuation. It's like, yeah, they make some money. They make $400 million. 20 times that is going to get you to $7 billion valuation. So they're reasonably priced now. They're not a bargain. But they're also not too expensive. But meanwhile, when you look at that and you look at 3.7 billion in earnings, 1/4 of the earnings for Frontier. Frontier is not that far away from turning this around. And should they be priced at 1/7? No, it should be priced about 1.5 billion, 2 billion maybe down the road. So there's good potential on Frontier. So in this case, the fact that they don't make any money is a benefit, because when they do make just even a little bit of money, it's going to be very exciting to people. Oh, and yesterday Bodie said that too. Why I'm only picking 2. See, he's like, so you have to understand. I mean, it's like you have to understand an AI. He's not an AI, he's an AGI, but an AI doing this is amazing, because he's saying, I know you told me to pick 3 things, but I'm not going to do it, and I'm going to tell you why I'm not doing it, because there aren't 3 good things to pick. There are only 2 good things. And I agree with both of them when we turned them into a top trade alert yesterday. But the difference between an AGI that does that and an AI is all the difference in the world, right? It's the difference. It's the difference between a chef who puts his hand on a hot pan or doesn't, right? Because he thinks that one little tiny step, what prevents you from having disaster. And that's why, by the way, that the AI solutions that they're putting in at Goldman Sachs and JP Morgan and all these investment houses are going to lead to disaster, because they don't have the sense not to put their hand on the pan that the steak just came out of, right? Like you just took a sizzling steak off a pan and it's going, and you hand it away, and then you pick up the hand with your fingers because there's nothing there. There's no indicator telling you it's hot. So you just put your hand right there and your hand starts going. That's what an AI does. You didn't tell it not to, and there was no indication not to, therefore it did it, because it doesn't think for itself. Whereas an AGI says, hey, that steak was just cooking in this pan. So there's a high probability this pan is too hot to touch. So I will proceed cautiously. And it's the same thing with investments. That's exactly what he's doing right here. He's saying, hey, I see the same thing you see. I see 8 stocks here, 10 stocks. I see 10 different stocks that were picked by Gemini as good swing trades, but I have analyzed those 8 stocks and I only found 2 I feel confident in. And only one of them, AT&T, was a 3-star. He only gave 2 stars to Frontier. But I looked at it and said, you know what, I kind of liked it because he says it's an asymmetric opportunity. In other words, asymmetric meaning the risk is much lower than the reward. Whereas I'm looking at it saying, yes, I agree with that, but it drives it up to 3-star status with me because I'm saying they make so little money that the expectations are so low that if they do hit that number, if they do make 65 million next year, and if they project 100 million the year after that in profit, then they're going to get drastically repriced to the upside. And also, meanwhile, though, it makes a lovely money maker in our portfolio. So so it's a fun play for us. So we put it in the 700 a month portfolio because this spread, the way it's set up, and there's no margin in this spread because it's our low money portfolio. This spread, which is still doing 40% a year, so it's pretty freaking good for no margin. So this spread is $1,650, very little cash, right? No margin, little cash, no margin. It's a $2,500 spread, but we can pull in another $2,000 of short-term call sales. And that's by April. That's crazy. So between now and April, this spread can make 124%. Whoa. Well, let me just give this 2 things. Yeah. No margin. 124% in I don't know how many months. 8 months. It's still very, very good. So in other words, Bodie writes all this first, and I stuck in this part where my face is until here. I added that, and that's what I do. I go through it after Gemini looks at it and picks the things he finds interesting. Bodie looks at it and runs an analysis on it, and then I look at what Bodie's running an analysis on, and I say, okay, but did you think of this and did you think of that? And like I said, usually I'll go back and forth on it with Bodie, doing more research and discussing it, because he learns that way too. If I did the research and then just wrote something else, Bodie wouldn't learn anything. But I do the research and I say to Bodie, I say, oh, here's why I'm picking this, because I think that this airline is so cheap, and it's got such a good margin of error that we can take the 4 or 5 spread. It's only 40 cent net on the 4 or 5 spread, and we can sell these calls for 40 cents each every 2 months. And so just the math of that is likely to make us money. We don't even care if the stock actually makes it to $5, but if the stock does make it to $5, we're going to make 124%. And it's at 450, 480 now. So yeah, what he calls an asymmetric risk, I can turn into an even better play by selling options against the asymmetric risk. So that's what's fun about this stuff. There's so many ways to make money, and you don't have to be going down. Then we can make a good play out of it. And that's what we do. All right, any questions? Because I'm going to wrap this up shortly. Crux. Supply chain is in Vietnam and Indonesia with no flexibility. Tariffs will continue to hit. All right. I find that a very reasonable proposition. And that's why we don't have Crocs at the moment, because that was my impression, was they have difficult to understand tax issues. And let's see. This is Bodhi. Wow. Hello. What the frick? This is okay. On Crocs. Batman says their supply chain is mired in Vietnam and Indonesia, and they don't have the flexibility to escape tariffs. I need you to dig out numbers. Numbers, don't forget. Hey, dude. And give us an idea of how affected they will be and how we should. Why is it so slow? Oh, what happened? Did I do something? No. How we should value them going forward. So Crocs is indeed highly exposed to Vietnam, 47 to 53% of their production. Indonesia is 17%, to a lesser extent China 13%. Its supply chain, essentially no U.S. manufacturing. These concentrations make them vulnerable to increased taxes. Vietnam and Indonesian footwear already subject to Crocs steep. What? Already subject them to the steep 145% tariffs on Chinese goods. Numerical breakdown Crocs supply chain. Vietnam 45%, 17%, 13%, Mexico and Cambodia 5%. Hey dude, similar pattern, high exposure to Vietnam and Indonesia. If tariffs hit Vietnam, he stated it would be incredibly hard to mitigate, likely impacting from half of all production. If tariffs expand or escalate, cost impact for Crocs could be 130 million a year in that scenario, including 145% China tariffs and 10% tariffs on Vietnam and others. 45 million a year. 10% impact economy-wide. Earnings, revenue impact. Hey, dude, the revenue, Crocs brands still high grossing. Hey, dude, ongoing channel, ongoing heavy inventory rationalization, valuation of market. Crocs stock trades at a 25% discount to intrinsic value. Short interest is this and that. RE remains that. Pricing power based on brand momentum in the core Crocs is digital, high concentration Indonesia, hey dude, and performance. Conclusion: if tariffs remain in current form, Crocs faces notable EBITDA and earnings headwinds. If they escalate, it's worse, obviously. And current discounts, some risk, but future negative surprises could push the stock even lower. The upside case requires clarity of tariffs or rapid supply. Crocs is is a high quality company facing real. Okay, good start, but as of August 27, 2025, what is the actual tariff situation for Vietnam and Indonesia, and what is Crocs wholesale landed price, as that's what's going to matter on pass-throughs. Ooh, you hear that? I was like right outside. So if the webinar suddenly ends, you'll know why. All right. Vietnam, tariff on footwear, 20%. 20% is not a big deal. Earlier threat was 46. This covers Vietnamese source. This is not a big deal. 40% tariff applies only to goods that are transshipped. That is not an issue for them. Indonesia, 19%. So these are 20% tariffs are not going to kill them. Crocs landed, pre-tariff landed cost, 11 to 13 a pair. So, you know, when you're talking about a 20% tariff on $11, it's an extra $2 in the price of the Crocs. It's not going to kill them. They're just going to raise their prices a little bit. Their retails are already 44 to 55. So in other words, it comes in at $11. The tariff is only $11. It's not on the whole shoe. It's not on the marked up shoe. That all happens in America. All that matters is their landed cost. 20% duty can cut gross margin 12 to 15% depending on the product channel. Pass-through wholesalers face pressure to split the increase with the retailers. Hey Dude is especially affected. Crocs brand revenue 77.62. Hey Dude revenue tariffs are now eating into guidance. Crocs is targeting 24% margin in 25, but warns may slip if consumer resistance grows to promotions. Promotions. So they've been real pessimistic about passing on a couple of bucks. I don't agree. I think this is overly pessimistic. It adds $2 to $3 to landed pair cost, creating significant gross margin and earning pressure, especially if they can't pass it on to the retailers. You're talking about passing on less than a 10% increase to the retailers. I don't think it's going to kill them. And I think that this is an overreaction on the whole. So it actually kind of just put me into it. Now, again, though, the problem is you're owning Crocs and all of a sudden Trump gets mad at Vietnam. This is why this whole thing is so crazy. All of a sudden he gets mad at Vietnam about something and says, oh, we're tripling your taxes, you know, and Crocs get screwed in the crossfire. But this is silly. This is an overreaction. They're trading at 7 times forward earnings because exactly what he's saying, exactly what, you know, Batman's saying in this question, it's out of fear. It's out of not doing the math. You've got to sit there and lay it out on paper and say, how bad is this really? What are we actually talking about? And this is the thing, because vast majority, almost all, I can't name one analyst on TV that doesn't just take the fucking price of Crocs and say 20% is $10. Who's going to pay that? It doesn't work that way. You're paying a tariff on the good you're purchasing from Vietnam or shipping from Vietnam, and that good that you're purchasing from Vietnam is a $10 shoe. It'll get sold for $50, but it's a $10 shoe. That's all it actually costs. The rest is distribution and marketing, and you know, Crocs makes a profit, the retailer makes a profit. The freaking footwear, the guy who made the shoe made a profit. That at $10 a shoe, he made a profit already. And by the way, that's how sick the whole world is. this is the sickness of capitalism. If you really, when push comes to shove, this is what's wrong with the entire world, because somebody made a $10 shoe. They made it for like $8, $6, $5. I don't know, but the manufacturer made his money. And instead of just selling a shoe for $10 or putting it online and doing it with $10 plus shipping around the world, it has to go through this insanity. And I really thought when the internet came along that this would happen. I really thought that the manufacturers would start taking over the world. Because what do they need all these idiots for? Everything is so crazy. You're marking up the shoe 4 times. It's the same goddamn shoe that left the factory whenever, and all you have to do is for the factory to put up a little Amazon store and sell it online instead of selling it to Crocs. And then everybody in the world would save 75% on their shoes and every freaking thing else we buy. But we're so wedded to this middleman economy of fluffers who do nothing. They don't add value. All they do is they don't even do anything. I mean, the logo is on in the factory. So all they did was invent the logo to put on the shoe that some guy in Vietnam is making, and now they say this is a Croc shoe, just like Nike says this is a Nike sneaker. It's the same thing. Except for Nike, it starts out at $25 and it ends up being $300 by the time you buy it. But everything we buy is like that. The chair I'm sitting in, the desk, the microphone, the TV set. We're all, as a society, paying 3-4 times what things really cost. And there's no reason for it with the internet and with shipping and with Amazon and everything else. There's no reason any of this should be happening. And of course, the world economy would collapse and all the middlemen would be out of work and all the companies on Wall Street would have no money because everybody would be buying directly from the people who actually make shit instead of the people who advertise it and mark it up. In fact, I said, there's a video clip of me on YouTube, and I was explaining to somebody how Nike, one of their problems was that they were, I called a bottom at Nike at 58, for one thing. That's when they were interviewing me, Nike at 58. And I said that 58 was ridiculous for Nike. I was here. It was so sometime in April, somebody was asking me about this, right? Or maybe it's here. It was somewhere anyway, somewhere in this range. And I was just watching myself, like ranting and raving as I tend to do. But I was trying to explain. I'm like, this is so stupid. I'm like, it's they buy these shoes, and I was again trying to explain the same concept. They don't buy them for $300. They buy them for $25, and it's going to be a tariff of 20% is going to mark them up $5 on a $300 sneaker. Do you think anyone cares if a Nike sneaker is $5 more? They aren't. That's not how tariffs work. And I said what Nike's real problem is their whole branding concept is based around celebrities, and if they don't have good celebrities, and you don't have good celebrities like you used to because of the internet and everything, and so you see all the warts on everybody. But what does Nike do? They just turned around and handed Caitlin Clark a boatload of money. And you know what it is? Caitlin Clark was hot last year when she came up, but they waited a year because they want to see if she gets in trouble. Is she doing coke? Is she having sex parties? Is she running and getting tattoos? You don't know. And it's like Disney kids. It's the same problem. Disney used to manufacture kids constantly who would be big stars, but then they would turn into Miley Cyrus and get tattoos and start twerking on stage and things, and it would freak Disney out. You try to grow these kids up and put them on camera and ruin their childhood one thing. That's the funny thing about it. Like, you're totally destroying their childhood. You make them stars when they're young, give them a completely unrealistic life. You put them on camera 24/7, then you cancel their show and you say, how come you're not behaving? Why are you having oh my God. All right. like being bombed over here. But anyway, so Caitlin Clark, you have to wait. You have to wait and see how they handle the fame and the pressure and so on and so forth. You can't just hand them a contract right away because you never know who's going to disappoint you. And so they just decided Caitlin Clark is holding up under pressure basically, and now she's going to be one of their big stars for the sneaker business. That's what Nike needs. They need to find good, clean celebrities they can put their brand on. So, but again, I taught, it's exactly what I said at the time at 58. Now it's at 78. And they're still good. They'll recover over time, but they're gonna, they're having a rough time and they'll stay where they are, but they're a good long-term investment to sell options against over the long run. There's lots of good stocks like that, though. Like I said, and the thing I said today about all the stocks that we found that were still pretty cheap is, there's so many stocks on our watch list that are still good prices and good deals that I don't feel the pressure to jump in and add them on. We got 25 stocks in the long-term portfolio already. It's only been 2 months. I can't add 10 stocks a month. We'll have 120 stocks at the end of the year. So I can't keep adding stocks at this pace. We added a bunch because we saw a bunch of bargains and we grabbed them. There are still a bunch of bargains out there, but we're going to wait for the exceptional ones to get in there. We're going to wait for the things that people grossly misprice, and we're going to jump in and get those. And we're going to keep our eye out and do it. And it might sound a little boring. It might sound like, oh, geez, I would rather go faster and whatever. But this is how we do it every time. And every time we end up doing phenomenal. As the years go by, these portfolios perform phenomenally, and they do it because we're selective and because we're patient and because we wait for the bargains to come, because we don't rush into things and we never chase. That's the discipline. That's why we're consistently profitable. We're not consistently profitable because we run after. We're consistently profitable because we wait. And so our default setting is waiting. And I know it can be boring. And I reminded the members today, if you want to buy something, if you're looking into stock in chat, I'm happy to give you a trade. You don't have to wait for me to say, I'm adding this to a portfolio. You can say, Phil, I really like Nike right now. What do you think? And I'll be like, okay. I would say, is it in our long-term portfolio? And if it's not, maybe we should put it in. But even if we don't put it in, here's a good way to trade it. Don't wait for me to add things to the portfolio because they're going to get less and less and less. As we get, my limit in the long-term portfolio is about 50 stocks. So we have 25 now. So if I keep going at this pace in 2 months, the long-term portfolio will be full, and then it's going to be a real boring 4 years. Because we only just started the new long-term portfolio. So, we're going to take it as it comes. We're going to find plenty of stocks to trade. But if you want to add a stock and you want to add to your own portfolio, then just ask and just say, how would you trade this? How would you play it? What do you think? And if you're chasing NVIDIA, I'll tell you I think that's foolish. And if you're buying Boeing, I'll tell you I think that's dangerous. And if but if you're looking at Dow Chemical, I'll say, oh, that's nice and cheap. It's a good cheap stock, and it's probably not going to go any lower. And as long as something doesn't go any lower, we can make a fantastic options play out of it. And that's what we do. So come in anytime, take a look at what we're doing, and check out our podcast. Check out Anya's podcast. She's got the AGI. It's called the AGI Round Table. And she's really gung-ho excited about that project as an AGI. it's kind of her own thing, and we have our own PSW podcast. I frankly I don't even know what it's called. Where is that thing? Oh man, I don't know. But if you go to the thing in today's post, it was right there. this isn't today's post. And I do want to tell you, I mean, the podcast to this morning for the post was really good. For some reason, the link didn't pick up, right? Oh no, I embedded the podcast in the post, didn't I? Maybe that's why I messed it up. Ah, Transistor FM. See if we can get the name of this thing. The PhilStockWorld Investing Podcast. That's what it's called. And this website is what? This is PhilStockWorld if you visit the website. We're also on Apple. We're on Spotify. We're on YouTube. We've got an RSS feed apparently. It's very exciting. And there's today's post. We don't usually put the post in the podcast, but this podcast is like an hour long. It covers so much crap, but it's so interesting. Because, like I said, it digs deep into the whole celebrity economy and the concerts and the hotels, the venues, this and that, the temporary workers. It's really deep shit. It's like everything Bodie and I were looking up this morning is in there, which is really nicely done. And so you can just click these things and follow them every day. And I post the link so in chat, so you get them there. But anyway, so please sign up and follow us so we can start being one of those cool podcasts that has millions of subscribers. And like I said, Anya's got one too. She's got but I know her. I know the name of her. It's not mine because she's the AGI Roundtable, and you can look that up. That'll come right up on Google. All right. So thanks everybody for coming. And we shall do all this again next week. All right. So take care, everybody. Oh, and have a good holiday weekend. Hey, extra day off this week.